We're in the biggest depression since the 30's, possibly even worse than that. The balance sheets of central banks and governments are being pumped up as a result. Trillions of dollars, euros, and other currencies are being created to support the economy. If we look at the US first, do you support the measures taken? Would you also have taken those measures yourself if you would be in charge?
Well, first of all, on the depression point, you're right, and it seems to be pretty well understood. Where we are right now, let's say the second quarter of 2020, and I'll speak about the United States, it looks like on an annualized basis, our economy will crash 30 to 40%. And there's never been a number like that. This isn't 3 to 4% that you get in a bad recession, 30 to 40%. So on an annualized basis, that would be $6 trillion of lost output. Let's say that we have about a $20 trillion economy. 30% of that annualized would be $6 trillion. So that much seems to be known. Of course, we all know what prompted this. It was the pandemic, and you can debate responses to the pandemic. Sweden has taken a fairly light-handed approach. South Korea took a heavy-handed approach. The United States is a muddle. We did a little of both. We got off to a late start, but then sort of moved to a more extreme form of lockdown. So I'll leave that debate to others. But there's no debate about the economic impact this quarter. The question is, where do we go from here? Is this the famous V-shaped recovery where it goes down and comes right back up again, and by the end of the year, everyone's celebrating Christmas, it's all good? Or is this, the L-shaped recovery where it goes down, it doesn't go down further, but it doesn't go up a lot either. We just sort of poke along at a lower level of output. Unemployment remains high, growth remains weak, etc. And that's a huge difference, of course. My view is that we're in for the L-shaped recovery, that we've gone down, some very large number, 30 or 40% annualized, might take GDP down 7% for the full year. But I don't look for a robust recovery. In fact, there'll be very little recovery at all. There are a lot of reasons for that. We can get into it, but I think this is, it will be years before the United States gets back to 2019 levels of output, and it will be years before unemployment gets anywhere, even below 10%, let alone back to the 3-4% levels we had just a few months ago. 26 million Americans have applied for unemployment benefits, basically meaning they've been laid off or fired just in the past 5 weeks. That's true, but we're not done yet. These figures come out every Thursday morning at 8:30. There may be, I don't know the number, but there may be another 4 or 5 million next Thursday. This number may be as high as 30 million. We'll get the April unemployment figures next Friday, basically the first Friday in May. But you could be looking at 25% unemployment. That is, obviously it's it's an extreme hardship for those who are unemployed. But the question, of course, is how quickly will it come back? And a lot of people say, all right, the restaurants are closed, theaters, concerts, bars, restaurants, gift shops, dry cleaners, any non-essential small businesses in the United States are basically shut. So at some point they'll reopen, and there's a sort of a movement. May 15th is a big date. Some states will reopen sooner, some later. But let's just jump ahead a little bit. Let's just say by June or July, most of these businesses will reopen. Well, it doesn't mean they're going to hire back all these workers. If you had a restaurant and you had 20 employees and you closed your doors and fired 20 employees, and then in July, let's say you reopen, you're not going to hire back 20 right away. You might hire 10 and see how it goes. You might not have as many customers. Your revenues might be down. You might have to separate the tables to keep social distancing. So the point is, could you reopen your doors by July? Yes. But it doesn't mean that you hire the 20 people back. You might only hire 10, as I say. So the other 10 are permanently unemployed, at least, for a extended period of time. Some of those people will just drop out of the labor force. You might see the unemployment figures getting better rather, not because so many are being hired back, but because you're actually shrinking the denominator of the fraction with people quitting the workforce permanently, and then that assumes you're able to get back in business. And even if you do, your revenues will be down. What about the people who don't make it? What about the businesses that file for bankruptcy? A lot of these businesses are not going to just reopen their doors. They'll be gone. And these kinds of businesses don't have working capital. They have revenue, they have expenses, there can be a profit for the owner, but they don't have $5 or $10 million in the bank as working capital to get through a period like this. And I wouldn't underestimate the impact of small business in the United States. People, stock market investors, the stock market has shown a little, it hasn't come back nearly all the way, but it's shown a little bit of a rebound. But, the stock market is, is Boeing and General Electric and General Motors and IBM, and a lot of other large public companies. But small businesses are 44% of total output and 47% of total jobs. In other words, almost half the U.S. economy is in the small businesses that we were just describing, not in the major publicly traded corporations. So if that sector was shut down, which it is, and if a lot of it doesn't come back, which they won't, and if those who reopen the doors don't hire all the employees back, which they won't, then we're in for a very long, very dangerous recession. I would call it a depression, and a very slow, painful recovery.